You're listening to AI Prism from Seoul Economic Daily.
The policy shift announced today will force a strategic decision at the board level. Korea's Employers Federation just issued a formal directive telling 4,200 member companies to refuse union demands to pre-allocate operating profit as bonuses. Jensen Huang is meeting Korea's top 4 conglomerate groups in Taipei tonight. The $1 market goes 24 hours in July, and Hanwha Ocean is in the final stretch of a 60 trillion won submarine contract in Canada. It's Monday, June 1st. Let's look at a business story shaping corporate Korea. Start with the bonus governance issue, because the Korea Employers Federation directive issued today has direct board-level implications for every major Korean company entering summer wage negotiations. The Federation, representing 4,200 Korean companies, issued a special advisory today telling member firms that they have no legal obligation to comply with union demands to pre-allocate a fixed percentage of operating profit as bonuses. The advisory goes further. It states that strikes conducted specifically to force profit-sharing arrangements may constitute illegal industrial action. The context is that Samsung Electronics and SK Hynix have already agreed to allocate 10.5% and 10% of operating profit, respectively, to bonus pools. That precedent is now being cited by unions at Hyundai Motor, Kia, Kakao, HD Hyundai Heavy Industries, and LG Uplus, among others. Hyundai Motor and Kia unions are demanding 30% of net profit and 30% of operating profit, respectively. Figures the Federation calls unacceptable and legally questionable. The Federation's legal argument has 2 parts. First, pre-allocating operating profit before it reaches shareholders bypasses dividend procedures under the Commercial Act and may require shareholder approval. A Samsung Electronics shareholder group has already filed a formal objection on exactly these grounds. Second, if operating profit-linked bonuses are classified as wages rather than discretionary performance payments, they trigger cascading obligations. Overtime premiums, holiday pay, and retirement pay calculations would all reset upward. For CEOs managing Korean operations, the strategic read is this. The Federation is signaling that the Samsung and SK Hynix precedents should not be treated as transferable templates. Whether that position holds through the summer labor season, when unions at Hyundai and Kakao are already approaching strike authorization, is the key variable to watch. Now the technology partnership story. Jensen Huang is hosting Korea's top corporate leadership at a private dinner in Taipei tonight. Samsung Electronics, SK Hynix, Hyundai Motor, LG Electronics, Naver Cloud, and Doosan. The agenda covers semiconductor supply agreements and cooperation on Nvidia's physical AI platforms, Omniverse and Isaac. Huang meets SK Group Chairman Tae-Wan separately to advance what is being framed as an AI chip triangle alliance involving Nvidia, SK Hynix, and TSMC. Huang then returns to Korea around June 5th for follow-on meetings with the chairman of Hyundai, LG, and Naver. Samsung is using the same Computex venue to brief customers on HBM4E, its next-generation high-bandwidth memory, for which the company shipped the world's first samples on May 29th. The Computex Week is the highest-stakes business development period for Korean technology conglomerates this year. The Taiwan benchmark is worth noting directly. Seoul Economic Daily reporters walked Sinchu Science Park this week and measured 30 minutes on foot between MediaTek and TSMC. 900 companies and institutions in 15 square kilometers. Taiwan's GDP growth forecast for 2026 is 9.6% versus Korea's 2.6%. The competitive gap in ecosystem density, not in individual company scale, is the structural challenge Korean industrial policy needs to address. On the macro side, the Seoul foreign exchange market moves to 24-hour trading on July 6th. $1 trading will run Monday 6 a.m. through Saturday 6 a.m. continuously. The Bank of Korea governor has flagged that overnight NDF pricing, currently set offshore, should shift to the domestic market. The concern among treasurers is that thin overnight liquidity, at current exchange rate levels near 1,500 won per dollar, could amplify any external shock. The policy rationale is MSCI-developed market index inclusion, which requires improved foreign investor access to the one market. Finally, Hanwha Ocean is in the final round of Canada's submarine procurement program, a contract for 12 3,000-ton submarines valued at up to 60 trillion won, roughly $42 billion. Hanwha Ocean and HD Hyundai Heavy Industries are competing as a Korean consortium against Germany's ThyssenKrupp Marine Systems. The decision is expected in June. A win would be the largest single defense export contract in Korean history. 3 things to watch: the Kakao strike authorization, the company's first ever, and whether the Hyundai Motor Summer negotiations set a new bonus precedent. Nvidia's Computex keynote on June 2nd for Korea partnership announcements, and the Canadian submarine contract decision expected before month-end. That's today's AI Prism CEOs. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.